It's no wonder we're a little stressed out right now with headlines out there like Jeff Bezos warning that we need to batten down the hatches because the economy sucks, and Putin putting martial law in place in Ukraine, in places that he illegally annexed. So when you are stressed out in the world, what do? Let me know down in the comments. But one thing that I love to do is turn on my favorite show on Netflix. And that's what we're going to talk about today. We're going to talk about Netflix and how to kind of decompress from this market right now. But Netflix just announced earnings yesterday. So we're going to cover what Netflix announced yesterday. They beat earnings, but they want shareholders to pivot their thought process a little bit because Netflix may be the only profitable streaming service on the freaking planet right now. So let's jump over and take a peek at the charts for Netflix right now before taking a peek at how they did for their quarterly results. Right now, Netflix is trading up on the day. You can see that right there, 15% up when the broader stock market is actually down or relatively flat. But if you take a peek at the year-to-date chart for Netflix, Netflix is still down almost 60%. So you can treat this one or two ways. You either think that Netflix is extremely overvalued right now, or you think it's a fantastic deal because Netflix is down 60% year to date. Let me know how you're feeling down in the comments. But let's talk about what Netflix reported yesterday because I think it was actually pretty good news after losing quite a bit of subscribers over the past several quarters. Netflix added 2.41 million net subscribers versus an addition of 1.09 million subscribers that was forecasted. EPS came in at $3.10 per share versus $2.13 per share estimated. So a huge beat there. Revenue came in with a beat as well, a 1% beat, $7.93 billion versus $7.837 billion. So pretty flat on. But the big thing that Netflix CEO and executives want you to do, if you're a shareholder of Netflix, here's what they want you to do. They want you to think of Netflix in terms of profit and revenue, because Netflix is changing a bunch of things in the next several months to year. They are releasing a ad-supported tier for $6.99 per month that you can sign up for Netflix or downgrade to if you want to, but that will be an additional revenue source for Netflix going forward. Also, what Netflix is saying is forget about subscriber growth. We're not going to be growing by 10, 12, 14 million subscribers any longer because we have a ton of subscribers already. But we are generating $5 to $6 billion in profit every year, so you need to focus on those numbers going forward. So let me know how you feel about Netflix going forward. Do you like this idea on focusing on revenue and profit versus simply new additions to subscribers? I want to hear from you. And do you think that Netflix is making some good moves here by adding this ad-supported tier, and also what they've been talking about, cracking down on password sharing, and they're going to allow people to add others to their account for like $3 or $4 a month? I think it's pretty cool. So let me know how you're feeling about Netflix. As always, thank you so much for joining me for another video, and I'll see you in the next one.